Hello everyone and welcome to this edition of Startup Central. I'm Avan Dabaj. This is the only show that focuses on startup, the new economy, disruption and everything related to it. Well, we've got a jam-packed show lined up for you, but first up, let's take it straight then to the IPO market. Logistics services player Delhivery is going to come out with its IPO that opens on the 11th of May for subscription and closes on the 13th of May. In fact, remember the firm has cut their initial size of the IPO to close to 5,235 crores from 7,460 crores that had been planned earlier. They're going to raise close to 4,000 crores via fresh issue and close to 1,235 crore rupees via the OFS route. Upon its listing, it's going to join the likes of Blue Dart Express, TCI Express Mahindra Logistics, and you've got SoftBank, which is the largest shareholder in the company with close to a 23% stake. Nexus Ventures, Carlyle as well hold stake in the company, and they will be selling part of their stake. Joining in right now on the show is Sandeep Barasia. He's the Chief Business Officer as well as the Managing Director of Delhivery to talk about the IPO and lots more. Sandeep, great to have you on board. I just want to start off by understanding the timing of the IPO at a time when, the markets are looking awfully tumultuous, very volatile. Are you confident that, it's a good time to plan your this initial public offering?
Hi, Avan. Thanks for that question. I know it's very topical. We are a logistics business. Delhivery is India's largest and fastest growing logistics business. We are focused on the business of logistics and serving our customers. We are not experts on market timing or when is a good time and when is a bad time. We've looked to our BRLMs to advise us on timing of the market, and they felt like this is the right time for us to go. Based on the feedback that they've received from investors who are actually coming onto our anchor book, it seems like a good time for us to go. And so that's the step that we've taken.
Fair enough. Let's talk about the business in particular because, as part of the presentation, you guys have stressed upon the fact that it's a very asset-light business. Out of the 8,000 trucks that are in operation on a daily basis, less than 300 are owned by the company. Just walk us through what is the outlook in terms of the road to profitability as well when it comes to the company, especially given the fact that it is an asset-light business.
Great, thanks. That's a very good question. We are definitely an asset-light company. So let me just point you to some basic highlights. We are India's largest and fastest growing supply chain company. In 2009, FY19, we were 1,600 crores in revenue. First 9 months of FY22, we were over 5,000 crores in revenue on pro rata basis. That's over 3 times increase in revenue in the 3-year period. In that period of time, actually unit economics have massively improved. In FY19, we were minus 11.3% negative adjusted EBITDA. And adjusted EBITDA for 9 months of FY22 was actually almost break even. We were at minus 0.7% of adjusted EBITDA negative. And that's a massive improvement. Actually, in our DRHP, what people will notice is that in the first quarter of FY22, we were at minus 3.7%. And on first 9 months, on a 9-month basis, we were almost break even. That means the second and third quarter combined actually have been profitable. So it's not a question of path to profitability. On an adjusted EBITDA basis, we achieved profitability in the second half of FY22 already. And there's no reason to believe that the trend is not going to continue going forward. There's massive operating leverage in our business. That operating leverage comes, logistics is a scale business. Globally, logistics is a scale business, and logistics companies that lead the world are upwards of 10 billion and 50 billion in size. India is a unique market where the largest player is Delhivery, and we only 5,000 crores in revenue in the first 9 months of last year. And so as we continue to build scale, we get massive amount of operating leverage coming out of our business. And that comes from higher productivity of the manpower that we have, a smarter and greater utilization of the asset-light fleet that we have, and much higher throughputs using our automation technology through all the real estate that we operate, again, which we don't own. So yes, it's a very asset-light business. We don't own trucks, we don't own land and building, yet we're able to drive massive amount of throughput and utilization of those facilities to get us to that path to profitability.
Fair enough. Sandeep, perhaps putting you in the spot here, but in terms of the IPO size as well, it was earlier planned for close to 7,460 crore rupees, and now the total issue size has been cut quite significantly to about 5,200 odd crore rupees. What is the outlook in terms of, the message that you would like to send out regarding this reduction in the overall size and what it means?
Again, no message specifically to send out there, Avan. I think we've been advised by our bankers that that is the right issue for us to actually go out with. In the earlier instance, we had over 2,400 crores of secondary on sale. Investors who were actually selling those shares feel like the company's growth prospects are ones that they would actually stay invested in for longer, and so they've reduced the secondary offering by 50%. And that's one of the big drivers of the drop in issue size, is that it's just we have fewer sellers and they want to sell less. They want to stay invested in the company longer. We also, as of December 31st of FY22, we had 2,900 crores of cash already in the balance sheet. And so we felt like an additional 4,000 crores that we are raising now in the revised issue is actually enough for us to meet all our requirements for organic growth and inorganic activities that we will do. And so it felt that that actually is the right size for the company to grow.
And, I just want to talk about the tech industry, because it seems like that boom that we saw in the tech IPOs really came to a grinding halt, given that a lot of the very high profile startups tanked quite badly after their recent listings. If you take a Zomato, for instance, or what happened with Nykaa or Paytm for that matter. So, I'm sort of circling back to the same question, but at a time when tech really seems to be falling out of favor, there has been a lot of contemplation as well in terms of the overall timeline for the IPO that you guys have reconsidered time and again. So why now?
Well, I think, I'm glad you asked that question. I'm not going to comment on what other tech stocks have done or any of that. That's not my place to do so. I think it's important for me to communicate to your audience and let them know that, deep down, we are actually a brick and mortar business. We are tech enabled. We're not a tech company, because we serve the logistics industry, which is completely non-discretionary in nature, right? If you manufacture anything in this economy, or if there's any trade of goods that's going to happen, logistics is going to be required. Goods have to be stored and they have to be moved, and multiple times over they have to be moved. So you can't get rid of logistics. Logistics is so core and essential to the economy. And within that, what we are is we have a tech enabled play. So we have a differentiated play in that economy. You can do a DCF on our business. It's fairly straightforward. So rather than labeling us as a consumer tech business, I think the right view of Delhivery would be a tech enabled company, serving a very, very large, fragmented, quintessential industry within the economy. So I think we're quite different in that sense.
Okay. Some very marquee names that are investors in the company at present, the likes of SoftBank, one of the largest shareholders in Delhivery. There's Nexus Ventures, Carlyle, just among others. Just walk us through the details in terms of how much you're going to be raising fresh, the overall OFS, and why you think you left enough on the table for investors.
I think those are questions I think you are better off asking our bankers than us. Of the overall issue size, 4,000 crores is primary, and rest is secondary, which is OFS is a very small component of the overall issue. It's mostly a primary issue. As I said, the OFS issue was reduced by 50% because shareholders wanted to stay invested in the company longer. And 4,000 is the primary issue. The price and the value of the company was determined by the bankers based on the feedback that they received from marquee investors who are coming into the anchor book, which will open and close on the 10th of this month. And it's really based on their advice that we've come to the price and the value for the company. But I think it's important to understand that we are still the largest and fastest growing supply chain company. We serve a $300 billion non-discretionary market, which is highly fragmented. And we have lots of differentiations in terms of our technology stack, our asset light network, our integrated mesh network that we operate in, which is enabling us to grow at the speed that we are, and we're quite differentiated from the rest of the market. And those are the benefits that investors see, and on that basis, they've given feedback to our bankers of what the value and price should be.
I think now I'm going to ask you a question that you'll be very comfortable answering, Sandeep. Recently,
Sure.
There was a number of strategic investments that have been made by the company, the acquisition of SpotOn, the investment in Falcon, strategic partnerships with FedEx as well. What has been the rationale on some of these investments, and what kind of value addition are you looking at?
So, while the organic opportunity for delivery is massive, we do believe that if there's opportunities to bring that scale up forward, we should take advantage of it. So over the last year, we've done 3 very large investments. One is Falcon. The first one was SpotOn. SpotOn, when we acquired SpotOn was the number 4 part truckload business in the country. Again, very technology focused, like delivery, similar culture. By bringing together 2 businesses, we've actually moved to number 2 position in the part truckload business, and are growing, and still jointly are by far the fastest growing part truckload business in the country. And we've been able to bring our cultures together. We've integrated the management team, and we haven't lost a single person in that entire process. So it's gone very smoothly. By doing SpotOn, we've also signaled to the market that we have the ability and the appetite to do large scale investments and M&A in the logistics space. FedEx was something that we are very excited about, because as India's cross-border trade increases, I think the delivery FedEx partnership will truly offer an alternative to Indian merchants that want to import and export out of India. With the FedEx partnership, we get access to FedEx's global network, especially North America and Europe, which are India's largest trading partners. And FedEx in turn gets access to Delivery's entire networks, all 17,500 pin codes in India that Delivery serves, FedEx can access. FedEx has also invested $100 million in Delivery. And we're excited about that, because in many ways, that's a testament of the business that we have built in India, that the world's largest express parcel company chose to invest in Delivery and sees Delivery as a partner. And the global CEO has joined our board, and along with him, he brings vast amounts of experience that Delivery can leverage. So we're very excited about that opportunity. And then we made an investment in a company called Falcon Autotech. We bought 30% of that company. Falcon is India's largest manufacturer of engineering goods for our industry. And then together we can jointly build the next generation of automation. So overall, I think the point is that we will continue to do these acquisitions and M&A partnerships, but they will focus on our core business.
All right. We wish you all the very best. Thanks very much for joining in and answering all of those questions, and looking forward to what happens as well with the IPO and listing.
Thank you so much. Have a great day.